So we are recording. It's a wonderful day in the neighborhood, Gentle John. Good morning to you. Super sound, John. Thanks, Tom Holland, Dutchman. And let's get this thing kicked off. All right, so we're going to get back to this scan here. This is just JP Short Stocks Daily. These are, many of you, if you're familiar with Thinkorswim, know we have our PPS indicator and our pivots. So let me get rid of this first, because what this scan picks up in the platform that we're looking at today, or that I'm using right now for my advanced analysis work, is Genesis Trade Navigator. From your left, just to introduce the cast of characters that you see on your screen, on your left is a monthly chart. And if you ever have a doubt what time frame I'm on, in the upper, as you can see up here at the upper left corner in this drop-down window, as soon as I highlight on a chart, it gives you the time frame. So if it's not listed up here, as soon as I highlight on the chart, you can see what the time frame is. Everyone can see that? Is that show up on everyone's chart? There's a couple things with Omnovia too that new visitors may struggle with, and that they may not be able to see the entire screen on their computer. At the top of the toolbar, there is a little icon with these like 4 arrows, and it says it looks like a button with 4 little arrows and a square, and it says full screen. And if you click on that, you'll get the full screen option, and you can widen what is on my screen to fit your screen. Does everyone see that? Does anyone have it? If you do have a problem, we've got a lot of real good people in the room, starting with, we'll start with Sonia, and who's been a long-time friend of the family, student, and now is part of the Trading Trigger University team. So Sonia will be able to help you. And she's got an incredible Southern accent. So if anyone ever gets an opportunity to talk to Sonia, she's got one of those. She's like that. I call her the Southern Belle. She's got that Southern. I'm probably embarrassing the dickens out of her right now. Her husband, Gordon, they're just wonderful people, as are a lot of our students. So anyway, if you have any issues or questions, just PM Sonia. She'll give you a hand, or if you have any questions, and give her a call. You know who she is now. All right. Next, let's go up here, and in the middle, you're going to see weekly. That's a weekly chart, and over to the far right is daily. So basically, what you see right here, just so everyone can understand what they're showing, because as soon as I get done explaining what to look at and what you're looking at, we're going to rip right through our quarterly and monthly outlook for the markets here. All right. So this screen to your left is our scanning list that was populated. At the end of every night, we look for scans that, in this case, are, as you can see, it says JP Short Stock Daily in the S&P 500. These are all the stocks that generated a PPS sell signal in the S&P 500. Now, the person's pivots that you see here, we have, just so that you can take a look at it, you'll see that we have weekly pivots overlaid. So we have daily charts with weekly pivots. In the middle chart, we have an on-balance volume with a moving average component. So we can take a look at, like, for example, this particular stock and say it's been in a buy signal. The last buy signal was here. We could see then we had another buy signal over here, a PPS buy signal. When we got into that buy signal, we could see a breakout of the moving average. And then what's this red line down here? All right, pretty much what this is a relative strength with a moving average compared this stock to the S&P's performance. It tells me if it's outperforming the S&P. And as you can see, as we come in here with Agilent Technology, we started to break out the performance of the S&Ps. The volume started to break out. The trend has been up. And what we generally like to look at are weekly time frames. When the weekly time frame, and as you can see here, seasonality on the weekly chart is very instrumental. So now I can tell if we want to take a weekly buy signal, if we're entering in a seasonal time frame where the market does bottom. That's extremely important because for this particular stock, which is in the technology hardware, it's important to say, is this sector strong? And more importantly, if we're entering in a seasonally strong period of time, can I trust that longer term or weekly buy signal? Next thing we want to look at, is there any volume associated with this move? Are we seeing any volume coming into play in this market? And as you can see, the moving average is kind of flatline, and as we got into this, and this is extremely helpful information, I truly believe, as we stated yesterday, as we teach in our course, volume is, as most of you, if you've been around a long time, know that volume is the lifeblood of a market. And it shows that there is participation. The last thing you want to do is get a buy signal and be the only guy in town that's playing that stock. You want to make sure that there's institutional money behind it. You want to make sure that there is an association with a few things. Is that sector that stock in, is it in a seasonally strong period of time? Number one. Number two, is there momentum behind? What drives momentum? Activity, action, which is defined by volume. So I'm using on-balance volume rather than the volume histogram bars, which can tend to, we'll put one up here, we'll put up the volume bars. Volume is this is something that's been extremely helpful for me for decades and years, especially in the last, say, 15 years, folks. So if you're going to walk away with some really good information today, if there's anything here that I would like a solid message, why do I use on-balance volume versus the histogram? Because many times, a lot of you have told me that they struggle with market moves because they're looking at this volume, and as you can tell, this is a completely different picture, isn't it? If you compare, and let me go over here because this is an important, I would say, life lesson, kind of. All right, so I'm going to get rid of seasonals, and let's take a look at this. Okay, so if we compare an apple to an apple, so we have a weekly bar here. Okay, these are weekly charts. Would it be safe to assume that from this point in time, let's compare an apple to an apple. And I think you know where I'm going with this, right? By the way, the creator of On Balance Volume, his name was Joe Granville. He passed away September 7th. So we did lose another great famed technician. And so now, let's take, apart from looking at one strong volume day bar, I'll try to see if I can expand this up. From this point, comparing apples to apples, same point in time, most people would say, gee, if you're looking at a histogram bar, the average volume, we see more of an average decline in the volume. Would everyone agree with that statement? If you're using histogram bars, and this is the struggle people have, they go, well, the rally isn't on strong volume, so therefore it's not sustainable. And so what happens is people think that, you know what, this stock's no good, there's no volume. And there's no volume associated with it. But what on-balance volume does, and this is what I think has happened in the last 10 to 15 years. Number one, volume histogram is not as relevant as it used to be 20, 30 years ago. And one of the main reasons is we now have the FTSE, the Hang Seng, the CAC 40, the list goes on and on and on and on and on. We're all looking at global markets. We're losing market participants. Foreign investors used to come to the United States and trade our markets. Now, they no longer need to trade our markets. They can trade their own markets. And so you see more popularity of number one, or it's diluted. The marketplace is diluted now with the amount of stocks that you can trade and the amount of exchanges that you can trade it on. So that's number one. Number two, another issue is 15 to 12 years ago, options were not as popular. So we could put on a synthetic long positions. And as hedge funds became, in the last 6-7 years, hedge funds became the rave, and people, and new laws were changed, and it was able to set up hedge funds. The banking laws changed, so you had investment bankers in '99. Banks could start to invest in the market. Remember that? And so now you have more and more sophisticated programs that people are using options. So they're no longer using maybe the underlying market. They can use derivatives such as the options. And then finally, in around 2005, as they started to create more and more, in effect, the exchange-traded funds, the first ETFs were on the Qs, the OEX, you had the diamonds. Those were the first ETFs created, right? And then all of a sudden you had ETFs on currencies, the FXE, the FXY, you had GLD, SLV for gold and silver, and the list goes on. Now you got inverse, leveraged, you got DUG, DUST, the list goes on and on, TZA. We have all kinds of different exchange-traded funds, and more importantly, what do we have? We have options on those exchange-traded funds. So if you think of the logic behind how can volume get diluted, it's real simple. I don't have to buy that stock. I can look at that stock or buy a basket of those stocks. I can buy into ETFs, and so I feel that one of the reasons that we see volume levels not as effective in the market is because there's different ways to trade the market. So that brings us back to Joe Granville's on-balance volume indicator. It pretty much just tracks when there's an update. It's a cumulative ratio of volume on positive days versus volume on negative days. And as you can see clearly, the volume is running up. Now, if we go back to our chart and we go back in here to turn back on my, so I don't lose my settings, and so we go back here and let me get rid of volume. Volume still has an important role, by the way, because we can see if at the end of trends you get these large volume bursts, may give you a sense that after a long trend you might get one of those exhaustion blow-off top type formations, or if there's just an acceleration move to the upside. Typically you get those big accelerated moves to the upside. That's when you get the general public saying they got to get in, and then you get those little pullbacks. This is a stock, by the way, Agilent Technologies. This is very important to what we're going to be talking about this morning. In the next 15 minutes we're going to spend time together, because this is a part of a component in the IIX, and the IIX, the Internet Technology Index, begins a seasonally strong period of time. You know, the funny thing is you get this little bottom in the market, and then it has a little rally. It kind of breaks, and this year, notice that a lot of seasonal stock performances, this is a very dangerous situation here for people, because they go, oh, it's a seasonally kind of a weak period of time. They don't look at the big picture. And the big picture for this is that we form pretty much, as you can see, the annual lows, not seasonal, which means maybe it has a little, like this is a seasonal high here in January, and then it goes down, then it comes back up, but then it forms the annual high in April, okay? And then it kind of goes down. And you can see from April, it really didn't do a whole lot. This year, the seasonality's got about a 3 to 4 week jump ahead of the game, all right? So right now, we say, if we get a PPS buy signal, did it come with an association of an uptick in volume? And the answer is absolutely. If you're paying attention to volume histogram bars, you're not going to pick that up. Therefore, that can kind of fool people. And I'm sure if I poll the audience right now, they would all say, yep, I've traded once in the past a histogram on volume, and I was fooled. Now, the market went up, and it was on low volume, and it just didn't work. The market kept going up. Well, what might help you is to change the indicator that you're using, and that's where on-balance volume helps us to define the strength of the trend. And as we started the conversation off with, was the momentum of the market. Is there momentum behind the market? If this thing's going up, I want to know, is it going up on stronger volume? And as you can see with Agilent Technologies, it's probably due for a little pause here, because as we've reached a substantial higher high in price in Agilent. I mean, we were at 45, now we're at 51, and so from January this year, you had a nice little move to the upside. It hasn't broken out with an association of new volume. So with that said, we probably expect a little bit of a pullback over the course of the next, going into the first week of October. But after that, I want everyone to pay attention because this sector generally gains steam moving forward. So there's a few names that we want to pay attention to in this space: technology, hardware, electronic equipment, Agilent. These are some of the top names in that space that we'll be focusing in on. That I think FLIR Systems is another one. It has a very similar pattern. Look at that, went straight up, and now look at this small little pullback. So it too has on October 11th a seasonal tendency to move up, and it generally has a seasonal tendency to move up going into, as you can see, the overall seasonal trend is up during that period, right? It has a couple glitches along the way, but one important element about this is it has this big straight up move, and then what does it have? It has a very muted consolidation, kind of like this situation here. Straight up move, nice volume associated with it, and then what did it do? It had a very kind of muted time period, so it was a stair step up, up. Now we're into that stair step. So it's what we'd like to do, folks, is if we're going to be looking at the IIX, Internet Technology space, if we're going to be looking in that sector, what you want to do is you want to scan for not just one name in that space. You want to look for several stocks in that space that might particularly have the same type of pattern, timing, and corresponding volume. And as you can see, the volume is pretty heavy. FLIR system looks pretty strong from the aspect that it's just coming back to its like little moving average that it broke out of. And notice that the correction is shallow in price, and it's been on very light volume. Does everyone see that? So this is a setup. This is a setup that when we pop into a weekly buy, I'm thinking we're going to see a big turnaround. Now, I just pushed on to something that's exclusive with Trade Navigator. This is if you've gotten a hold of the book called Mastering the Stock Market. I went through a whole list that was published last year, a whole list of the stock seasonalities. I think it was so important I started the book off chapter 1 on that. We talked about how to use scans in various platforms, including Thinkorswim, Trade Navigator, which I'm using right now. Very powerful to uncover if you're looking for some seasonal trades, what to give you an advanced look. Because right now it's very difficult to filter through all this nonsense, what's going on with our government. It's just, it's exciting in the sense that we need some commotion, we need drama, we need something to make markets move. But at the end of the day, there's a lot of smoke that can cloud traders' minds. Did this get passed? Did that get passed? Is Ben Bernanke doing this? What's going on? It's just back and forth. In the meantime, you have a lot of really clear, sweet signals. And if you focus in on certain stocks and certain sectors, and if you focus in on what I find really helpful is the fact that if I find more stocks in that sector with the same similar pattern, then it tells me that it's more controlled by institutional rather than retail trader, and that these folks are not in it for the short term. Institutional traders do not buy for the next 2 hours. They do not high-frequency traders. They're in it for the long haul, and they'll most likely defend a position on a decent pullback. So this is FLIR Systems. Now, I'm not sure if we can get lucky enough, but notice that on FLIR, for example, we're coming into a time frame, number one, that has a seasonally strong period of time. We've got a new quarter, so I just put my JP, as you see at the top of your screen here, it says JP Quarterly Pivots, all right? And so looking at the quarterly pivots, it's giving us a bullish outlook for the next quarter. And this quarter, friends, is the most important quarter of the year. The fourth quarter and the first few months of the first quarter up till April is generally the best 6 months of the year. So we've got mishmash in Washington. We've got mishmash at the Federal Reserve. We've got mishmash with the ECB. And what's going to happen today is that we're probably not going to get the construction spending. I don't know, but today we've had a few reports from a global perspective. We've had the German unemployment rate, which was, not too bad. It was within the realm of expectations. We had the PMI, European Manufacturing Index, that came out. We had the European unemployment rate come out this morning at 9 a.m. Central. And for you folks on the East Coast, that means 10 a.m. 9 a.m. Central, 10 a.m. Eastern. We have the ISM Manufacturing Index. Now, we normally would have construction spending, but I'm not sure if the government, which didn't get funded, or that I know of in the last 15 minutes, nothing passed. Did anything pass in the last 15 minutes that I've been talking? Nope. Okay, thanks, Butch. Well, the U.S. construction spending may or may not be released this morning. Okay, so, that's one that I think that, the ADP report tomorrow, we do have the monthly unemployment report. So again, what causes, if there is a shutdown, what's going to get shut down? Possibly government-controlled reporting, economic reports by the U.S. government. Those agencies may or may not be shut down. That would be kind of ironic, but in any event, I want everyone to kind of focus in on this, because I think that if we go back over here to the monthly charts, and I know that we have, what's really interesting to me is that, while it seems that we're buying high on FLIR, all we've really done for a number of years, okay, in a content that all we've really done is one big potential flagpole. And if we do pull back on a monthly basis, and if we're entering a seasonally strong period of time, now this again is a monthly chart, and it's got a PPS buy signal, and look at this, it went up, it went sideways, it went up, so we might see another sideways action. Look what we have. We have conjoining indicators on various time frames. We have a quarterly pivot coming in at around 30.75, but then we have our monthly moving averages down here at 29.24, and then we have the quarterly pivot support right there at around 27 against this old high right there, which was February's high. And I don't know if we're going to get up. It would be really nice that if we got a pullback into that area, old resistance becomes new support, but we have monthly moving averages, quarterly pivot support. We have some really exciting confluences, as we call them, confluences in a marketplace that has been grinding for the last 5 years. So if everyone thinks that this market's overbought and it's near its highs for the year, but it's not near its highs for 2011, and it certainly wasn't at its highs for 2008. So if FLIR, for example, this is just one stock of many, but they are very similar patterns, I think that, this could be, if there is going to be a great wave push to the upside, and I know there's a lot of talk that the crash is coming and the market's got a multi-year top, but I look at certain stocks and I look at certain sectors and I say, gee, this is kind of funny, because this doesn't look ultimately that bearish right now to me, from a volume perspective and from a longer-term historic perspective. So it's just one of the names in that space that I would say that we need to all look at. So when we go to Agilent Technologies, it doesn't have that bull flag type of formation, but it definitely has, from 2009, it's just kind of moved up, and we've not really gone anywhere yet. But if this thing broke out, and if you were thinking that this was a, if you just looked at this from a perspective of a, well, wrong trend line, excuse me, here we go. kind of a little wedge formation. There we go. If this thing decides to break out, it really could move, couldn't it? So from a longer term perspective, where was this stock back in 2000? So is it possible that we could see it's been in such a long-term basing action? There's still a lot of names out there, and if you take a longer-term look, and that's what I'm trying to describe, that's why we are looking at longer-term. We're looking at 90 days to a month out. We're looking at the end of the year, and as you can see here, looking at these old highs, we broke out, it did pull back once, and it's just been, look at the time it stayed at or near this little old resistance level. And I bet if I drew those lines in closer to the average of these highs, you'll notice that it's been acting more as a support, right? This average of prices, you got a buy signal, and now we're starting to break out. We're in a longer term kind of an uptrend. So if we get pullbacks in the next month or so, here's another stock that does not, I'm not getting this negative feeling that it's the end of the world. I mean, I know we just looked at two names in one segment, but there are multiple names like this. In fact, here's what I think a lot of people might be thinking. If we think the end of the world is coming in, Agilent Technologies is actually, out of the S&P 500, there's 89 stocks that are still above their 10-day moving average. All right? There's 89 stocks above their 10-day moving average. And so when we take a look at that and get rid of this stuff, and I would say Apple even is above its 10-day moving average. Apple had a monthly buy signal, that's a monthly high close doji, broke out, pulled back to monthly support. In fact, did that when we were in Germany. Had longer term support down here against this whole consolidation in here. Against those old highs, broke out, and it's still, for the second month in a row, 2 months in a row, it's maintained prices above those old highs. So typically, that has negated a false breakout, right? A breakout, if it broke out and then it retraced all the way back down, it would be a false breakout, and it would be more like a continuation of the downside. When you get 1 to 2 periods above old resistance, typically old resistance turns into new support. So there's the opening bell. Even Apple, my friends, does not look longer-term bearish. It has longer-term support coming in near this level. So watch the next $25 in the next month, and that's in Apple, which Apple, in fact, has, as you can see, a seasonally strong period. So we look for pullbacks into that market. Now, for going forward, you take a look at these names, CF Industries. We could take a look at AMAT, Applied Materials, Autodesk, Alexion Pharmaceuticals. I don't know if you're paying, you can see all that I'm showing you, but there's an awful lot of names that are breaking out to new highs. eBay. Now, eBay had a very bearish pattern with on-balance volume earlier this summer, and we kind of caught that. But now eBay is outperforming. Look at eBay's doing. Outperforming the S&Ps. It's outperforming the S&Ps, and it has a breakout in volume. So this new high, this high that we're creating in eBay right now, is dramatically different than that high, because there is a newer trend of volume associated with it. So eBay, the funny thing is, as well, if we come into looking at eBay, eBay has, from August going into this time frame, October, you look for a setback, but by the middle to the end of November, I'm looking for a move up in eBay. Quarterly basis, it's giving a bullish projection. eBay probably want to look for pullbacks to around that 52 to 51 quarterly support. So we definitely have a lot of names and sectors, and I wanted to really focus in on the one that has a lot of potential, and the IIX really does appeal to me, and I like the fact that relative strength, these are names that are outperforming the S&Ps right now. So while Congress is in a mismatch, while the rest of the world's debating what to do with interest rates, with Ben Bernanke, when quantitative easing is going to end, folks, there's still a lot of names out here that look at Goodyear tires. If the economy's doing so poorly, why is Goodyear selling a lot of tires? Must that be that maybe Ford and auto dealers are selling cars? Because guess what? Today, by the way, you're going to have a slew of global, not domestic, but global car manufacturers reporting sales. It's going to be kind of interesting to listen to what they're talking about. Nike, which just got added to the S&P 500, big time breakout. There's just so many names that I can't go into, but yesterday, remember I mentioned about MGM. I said, look, MGM is breaking out. This is, and I've been saying this for a long time, this is the ultimate consumer discretionary sector. If the public has got so much money that they can afford their rent, they can afford everything, that they can pay for a plane, and they go to gamble in Las Vegas, boy, this is what MGM represents. And it's not just MGM. Let's take a look at Las Vegas Sands. It broke out to new highs. I mean, and look at our volume analysis. Look at the volume analysis. Look at the relative performance to the S&Ps. That's Las Vegas Sand. What about Steve Wynn with Encore and everything as his exposure? It's the same thing. These charts look the same. The sector is on fire, and it's still giving us a strong outlook going forward. There was a lot of institutional buying in here. So I got news for you, friends. We've got some exciting stuff happening in the next month and this quarter, and you want to stay close to us. We're going to be doing more of these events, more of these quarterly outlooks. I thought I'd just share with you some great information on how you could maybe set your charts up a little bit, how I set my charts up, what we scan for, how we look for it, and the next issue is how do we trade it. Now, the stock market's open right now. We're at 1679 and 3/4, 1680, let's call it. And I don't know if I've got another minute or so while we wait for the kind of the markets to jostle around in this first 15 minutes here to get through. But let me go over and look at the indexes and at the advanced declines for you, all right? Because I think this, from a longer term perspective, this is kind of also what we like to look at for confirmation, is the health, which is considered the volume, and the breadth, which is considered our advanced decline. And when we take a look at the S&Ps formed a weekly sell signal, and we actually did go down. We had a very mild move with volume, and we had a very mild setback with the advanced decline. The charts on the bottom of our screen are weekly. The charts on the top are dailies. It might be hard to see the symbols, so I'll pop these up for you so you can see. All right? So this is the spiders. This is the S&P 500. Until we actually get confirmation of lower lows, right now we do not have lower lows. Until we get stronger volume on a weekly basis, there's not a chance in hell I can tell you that a long-term top's in the market. All I can tell you is that, you know, we might come back down in the S&Ps to test that low, or, you know, the way there's so many stocks looking still on a strong note right now, that's why people are very confused about the leadership of the market. This is the NASDAQ. NASDAQ never, I mean, we didn't even close below a prior low. Look at that on-balance volume right here. It's very strong. It had a major breakout to the upside with the technology space. There's your breakout. It's above a moving average. Look at our advanced decline on the NASDAQ. It didn't go down, so there's a lot of stocks still in favor with the NASDAQ. Now let's take a quick look. This is the Russell. The Russell, everyone was thinking this is the one that small caps have really been performing. On a week-to-week basis, folks, you're still lingering near the highs. On the volume aspect, it still is moving in the direction headed up. So it hasn't made newer lows. How can we put a sell signal on these markets when our indicators haven't generated sell signals yet? This is the New York Stock Exchange Composite Index. That's a green arrow, not a red arrow. So we might be developing a little bit of bearish divergence, but we don't have it yet. It's not there. So even on the NYSE, the New York Stock Exchange Composite Index, we still see strength in the marketplace. Last but not least, let's take a look at the dog market. It's the Dow. So the Dow has been the one that's really been perplexing a lot of people, including myself, because the Dow is typically comprised of high dividend yielding stocks. It's the blue chip of the blue chips. But as you can see from the charts that I just shared with you, people are going into technology. It's the new boom. It's the new productivity wave. We're seeing more and more of infrastructure of internet technology names moving and starting to advance. So we're seeing sector rotation, and that's the key word. This market is correcting in the form of not going down, but by sector rotation. And if that's the case, we got to teach you. It's going to be helpful for you to understand what the sectors are. The other day we talked about and even tweeted this out, that they're moving money into insurers, insurance companies. Even insurance companies were making and breaking out to newer highs. So we had a lot of different names, and one other sector that was moving, which was to my surprise last week, was we had a big move. Let me go over here to my relative strength page real quick, and we're going to wrap this up in just a minute. But one of the big surprises that I found was, number one, we had big moves, and let me go over here. The consumer discretionary sector was moving up, and here's the funny thing. Notice that the volume is strong on this rally on consumer discretionary stocks, and the price went up in a seasonally weak period of time. I can't imagine what's going to happen at the end of this month when we go into and enter a seasonally strong period of time. So if we get a correction in the XLY, if we see that market's kind of just grinding sideways, we've got holiday shoppers coming up. And here's another one of my theories, by the way. As we start to see in some of the employment numbers, if we see the employment numbers improve, it's not men and the segment of men going back to work, it's also professional women going back to work. And if women get back into the workforce, women apparel. I'm seeing a surge in women apparel and women accessory stocks, by the way. Now, I know that's a very specialized sector, but I think that it's something that it does bode well to focus in on. This is, as we see here, this is looking at the XRT, the S&P Retail Select Spider Index, okay? Now, as you can see, I've got two charts up here, all right? Black is the S&P 500, and this candlestick chart is the XRT. So as you can see, the red chart below, it shows that clearly the XRT, the retail select spider, or not spider, the retail exchange traded fund has been outperforming the S&Ps, and this red line shows that it's in a breakout mode. So we've been seeing the retail sector breaking out, outperforming S&Ps, and I think that is something that you know, if you're looking for confirmation of how weak the economy is, man, I'll tell you what, people don't go to Vegas and people don't buy apparel and accessories. And one of the names that I've liked is, believe it or not, it might skip your under your radar, but start looking at some of these women retail apparel stores. Not so much, I think, the department stores like your Macy's and your Nordstroms, your Ross, those have been a little bit under pressure, but surprisingly, let's look at this company here, because this company here was very surprising yesterday. It's in a weekly buy mode and enters a seasonally strong period of time. And we're going to start to, you see this little breakout with volume. This is a little purse manufacturing company called Coach. Now, they do have earnings coming out on October 28th, but you want to look for, and I know it looks ugly on the short-term daily charts, but it's starting to carve out this maybe longer-term bottom. Keep your eye on Coach because we are seeing accumulation of volume. And like yesterday, we saw kind of a nice little move in Coach there. So in any event, that's what I wanted to have mentioned to everybody. And I just wanted to show you those charts as we go into this month and also as we go into the quarter. Don't forget, we've got the holiday shopping season upon us, Black Fridays in November. You got to think of these things ahead of time so you can start to plan your equity distribution. And if you're planning for stock trades or if you're planning for options trades and you want to look for, what's under the radar that no one's paying attention to, that's why I'm teaching it to you right now, which hopefully is helpful. Get you guys to look at this stuff ahead of the game because you know what? You got to be well positioned in the market before it moves. You don't want to be looking at a trade after you see it on some of the speakheads on the television, right? So these financial guys that'll tell you after the move, you want to look at this stuff before the move. Internet technology, the IIX, that is one that I think we're going to spend a little bit more time in focusing. I see a lot of strength in that sector. And that is just absolutely monkey crazy straight up in the marketplace. That's a weekly chart on the IIX. And when we take a look at a monthly chart, can you imagine if we start to attack and you've broken clearly, folks, you've broken out of old highs. Agreed? What's the next level of resistance that you think we're going to probably want to test? So there's a lot of air to the upside in IIX, the Interactive Internet Index, okay? So as we enter a seasonally strong period of time, this market's definitely tested, pulled back, broke out, and that's where I think there's a lot of air to the upside. We've cleared old highs, as you can see on the longer-term chart. These old resistance in here, this old resistance in here, we've cleared all that. Right? So now the next test are these two highs there and then the all-time high. So this area has a lot of space to the upside. So that's why I wanted to focus in on, don't think that these stocks might be overbought. What you want to do is look for pullbacks as an opportunity. Don't get spooked into selling this stuff. And if everyone starts to say on the boob tube, sell, Mortimer, sell, guess what? That's when you want to turn up your analysis heat, look at the stocks, look at the volume, and see if institutions are really selling or buying for longer-term work, okay? So I hope that really was instrumental. We're going to stop the recording. We're 42 minutes. We didn't really miss much in the S&Ps. They're at 1680.5 right now. What I will tell you is this market is on pins and needles. And every time a Democrat says something, the market's going to move one way. Every time a Republican, John Bonner, if he comes out for the Speaker of the House and says something, it's going to move another way. So the market is going to be, you're going to have some potential decent day trades. You're going to have some whipsaws. I think going into the month of October, these are our earnings season. You got the government at work for us or not at work for us right now, no pun intended. And we're going to want to reduce your size because you are seeing sharp bursts, fast, sharp bursts. Now, yesterday we had a nice little trade setup, two nice trade setups in the morning session when I was around in the S&Ps and also in the euro currency. And so we're going to look for some trading opportunities some more today and possibly as the day progresses, if you have time to stay with us. Look at some more stocks and sector analysis for the next 90 days. I hope this definitely gave you some insights and some helpful tools that help me, and we look forward to having you come here and visit with us and see what we're about. So thank you all, And just remember, if you have not visited us before, we have our resident trade room, and my partner Butch Heading is here. And so Butch has been very instrumental, been a part of Trading Triggers. He's our co-founder for the last, we've been in, well, we've been together for, gosh, Butch, what, 9-10 years now. So in any event, I think you'll find, if you've not been here, some really solid trading instrumental information. So we look forward to having you here with us. Thank you all very much. I'm going to stop the recording now.